This is the Opening Market Podcast on the Iowa Agribusiness Radio Network for your Wednesday, the 4th of February. I'm Dustin Huffman, talking with Jim McCormick of AgMarket.net. And Jim, we had a nice little turnaround Tuesday, but now Wednesday things look to be floundering a little bit. Soybeans trying to claw back into the positive territory. What's going on?
It's relatively quiet news in the midweek. Like you said, we did have a nice little rebound. The government released some of its, 45Z guidance that is helping propel the bean oil market again today. And like I said, beans were a little bit weaker overnight. That probably has to do with Brazilian harvest is progressing. Rains look good. That Brazilian crop is probably going to get bigger, unfortunately, on that February WASDE number released next week, kind of limiting the beans gains. Corn market right now down 1.5 cents, relatively quiet. There's just not a lot of news to break this corn market out of its sideways range, it feels at this time. You remember, Dustin, you got a projected 2.2 billion carryout. That's comfortable. I mean, the fact of the matter is spot corn couldn't get over 440 since the first week of June with a carryout that was 1.5 last year, so now you're staring a 2.2 carryout in the face. The end users just don't seem like they have the gumption to just really chase this market higher. And we are starting to see corn move a little bit, and I would expect it'll pick up. Where I'm at, it has been very bitter cold here in the east. But as we progress through February, we will slowly warm up as the models are showing, and that will start bringing more grain to market as well, I fear.
You know, and it was interesting when we got that, report back in January and everything kind of like, okay, let's pump the brakes for a minute. We were expecting to see some changes in the basis, and we saw a few elevators here, like they started to adjust accordingly, but a few of them played it cautious, and now those that jumped the gun seem like they've pulled right back to where they are. I mean, it really doesn't seem like anybody's in a hurry to move too much corn anyway, like you were saying.
Well, right now they're not. I mean, I think it is a little bit of a game of chicken at the moment. The end users, I think are waiting to see how much gets moved. I mean, we need to face it. Unfortunately, a lot of producers are in a very weak fiscal position. You got a lot of 26 loans that are being worked out right now. The question just is, how much grain is going to have to be dumped onto the market between now and planning to help finance or pay down some of the 25 debt, or at least finance some of the 26 operating notes. And I think that's where we're at right now, is the end user just saying, well, there's no reason to be aggressive until we get closer to planning and see maybe where this all shakes out. And it's hard to believe. We're in the beginning of February. You're 60 days out from, that planning window really opening up.
Yeah, that is going to be interesting. And, you mentioned out the operating loans. We've been hearing from some farmers where they've been talking to their bankers and saying, hey, well, we can finance you this year. So it doesn't make them look like, it makes them a little bit worried about next year. And they're hearing also that, there are a lot of farmers, especially on the smaller end, that are not getting financing or having to look for alternative methods to get that financing for another year.
Yeah, it's tough right now. I mean, the fact of the matter is when you're looking at D's corn at 456, you're looking at no beans at 1081. That is not exciting anyone. I got to argue at this point, we've still got some weather to play out. We got to see how the Argentina crop plays out. They're a little bit dry right now. The Brazilian bean crop looks good, but then for the corn crop, you still got to see how the safrinha corn crop plays out. And then you also have to see how the U.S. corn crop plays out. We're very dry here in the eastern Midwest, although the one thing, you can't get too bulled up on the weather being dry. The analog years that the weather guys are watching, Dustin, unfortunately, are arguing those years that they think this summer may trend most like were all ended up being above normal trend line national yields. So we'll see how the weather plays out. But the reality is this: we already got a comfortable supply of corn and beans and wheat in the United States, if not a burdensome supply. We have a normal trend line yield this upcoming year. It's going to be a very frustrating year for producers, I fear.
All right. And then moving on to the livestock side of things, boy, cattle and hogs, they had a good day again yesterday. Hogs have been, kind of quietly, getting that moving upwards, where cattle's always been kind of exploding up there. What are we looking at here as we start the day here on this Wednesday?
Another strong day in the cattle market. We are rebounding back from that devastating sell-off at the end of 2025. It looks like we're trying to make some moves to the upside gaps, and it's a situation, a tale of two coins. The grain market guy is very, very stressed at this point in time. The cattle guy overall feeling pretty good. They've got their big convention going on down in Nashville right now, and I guess a lot of them are all smiles right now. It's a very strong market, although I think you cattle guy, if you're out there, I think you got to be a little bit cautious at these high prices. The old axiom is cattle market gives you two chances to sell. This may be chance number two. The economy is starting to show some cracks on the jobs numbers. we'll see what we get that job. We'll see how that number comes out here at the end of the week. But right now, charts are pointing higher, which is always a good sign.
When we were talking about this also, before we went on, Jim, obviously when you're down in Nashville, you're at these places, you see what these restaurants are charging. I mean, you talk about against the economy, the consumer spending is really changing, as far as the business. And you were talking about seeing bars and restaurants down there that were hurting. I mean, weather can affect that, obviously, but also the purse strings are starting to affect it even a little more.
Well, exactly. I mean, that in the cattle market really comes down to it right now. The supply is tight. That inventory report that we saw came out last week shows we are not building out this herd. The fact of the matter is the cattle, your traditional cattle feed, you're saying, I'd rather take the money today than wait to get paid a year and a half from now. So the traditional cattle guy, he's like, hey, I want my money now. And then you've got the grain guy that feeds cattle. A lot of those guys, we got to be honest, why are they? They're not in any big hurry to start building out the herd. The fact of the matter is they need to sell those animals to offset some of the grain losses, unfortunately. And that is those two combinations are going to keep this herd mentality, the mentality of, hey, we're going to build up this herd and build the supply back up. I think that's going to be on the back burner. So it's going to be, I think, a long time before we build the supply up.
And unfortunately, that's going to put us in a bind. And as we've been talking throughout the week, I've been talking with people, and it's been what's going to be the incentive to start changing that and turning it around. I mean, we hear about all sorts of different things, screwworm and everything else, but where is the incentive? What's going to have to drive to get those farmers to start changing their mind and start building that herd back up?
That's $1 million question. I mean, I don't know. If you're going to force me to make a guess, I would say you got to see the economy roll over quick. If you start seeing the economic conditions in the United States really start to erode fast, and the market has another secondary sell-off like we did in January, that may be the time where you see people say, okay, the party's over. I got to start resetting for the next game. And then maybe you'll start seeing this herd build out. But right now, the incentive, the tight supply, the demand for the consumer is still there. They're going to keep doing what they're doing, it feels like, at least temporarily.
All right, Jim. Well, if folks want to look at some of the intel you guys are following and get some more information from the folks at AgMarket.net, maybe look at what their plans are with this 26 crop, what's the best way for them to get that conversation started?
You can reach me directly at 815-665-0461. Reach any of the Ag Market team members at 844-424-6758.
All right, Jim. Well, we thanks so much for the insight. We'll talk to you again next week.
Thanks for having me on.
That again was Jim McCormick of AgMarket.net. Let's go ahead and run down those numbers for you. March corn is down 1 3/4 at 426 3/4. December new crop down a penny at 455 3/4. March soybeans are a half-cent lower at 1065 1/4. November new crop up 1 1/4. They're at 1080 1/2. Soybean meal is $3.50 lower at $288.40. Soy oil 70 cents higher at $55.19. Chicago wheat down 4 at 524 3/4 rather. Kansas winter wheat 4 3/4 lower at $5.30 even. Kansas spring wheat 4 cents higher at $5.69 even. Minneapolis spring wheat down 1 3/4 at $5.66 1/2. Oats up 1 3/4 at $3.06 1/2. On the Merc live cattle 90 cents higher at $241.22. Feeders up $3.92 at $371.85. Lean hogs down 35 cents at $88.20. Pork cutouts $1.30 higher at $99.25. And Class 3 milk 3 cents higher at $15.35. Thanks again to Jim McCormick of AgMarket.net for joining us here on the Iowa Agribusiness Radio Network. I'm Dustin Huffman. You're listening to the Opening Market Podcast.